Welcome to Rogue Trader. Please read the disclaimer. Remember that prices can go down as well as up. Pets at home. I'm looking at pets at home as I continue to seek some good Corona picks. That's stocks which aren't going to be affected by the current lockdown and will be fairly resilient to any longer term economic damage caused by that lockdown. So Pets at Home are the UK's largest pet shop retailer. They've also been moving into the veterinary business. They've got these huge stores in retail parks, and they've been moving grooming saloons in them recently. But most of their income from these stores comes from selling food and accessories. They also have an online presence. You can see that their number of stores has remained fairly stable recently, whilst the number of vets has gone up. And what I think's happened as a general theme with this company is they'd reached the point where they couldn't grow their revenues anymore by building new stores. They'd just reached the optimum number of stores, and so uh, they're trying to continually increase their revenues by then moving into the vets business. So when you look at their price historically, the last 5 years, the FTSE 100 has actually kind of been sideways in that time, whereas Pets at Home, they've kind of been dipped down and then gone back up. And it's kind of strange because their net income was pretty stable over this period. So it's just strange how they had such a large fall in their share price. And then it kind of reversed, and they had this bit of a restructure. They they basically their CEO resigned in 2018, and got replaced with a guy, Peter Pritchard, and they then put in place this new 3-year strategy. And what they've done is they lowered the pricing of their staples to get people habitually going into the stores just to get the dog food and the straw and whatever, the basic things. And rather than maybe what had been happening where they'd been going just to the local supermarket because it was cheaper. So they seem to have been fixing in the regular footfall, and then their strategy now has changed in that they're now then trying to get money not off the staples, but from when people then sign up to use the vets and things like this. So it's worth then looking into how profitable is it in the pets business. So I looked at this website called Statista, and it's got some excellent data there. I highly recommend going to that website. It was clear that the leading pets were dogs and cats, with 9 million dogs and 7.5 million cats in the UK. And then the smaller animals are actually much lower. I think that Pets at Home are well positioned here because even though they don't sell dogs and cats, they just sell the smaller stuff. They are concentrating now on the vets, and obviously people do take dogs and cats to the vets if they're poorly. And also they get lots of their revenue from people going in there to buy dog food and dog accessories. This was great to see this. Consumer spending on veterinary and pet services have greatly improved in the most recent years. Very high increase. And then from seeing that, you realise how Pets at Home do have quite a good strategy of focusing now on growing on the vet side and on the services side. In general, consumer spending has been on an uptrend over a long period of time now in the UK. People are continually spending more on their pets. So when the coronavirus crisis began, there were some news articles which showed that basically people had been obtaining double the number of animals than they had before. I mean, this news report is Battersea Dogs Home, and that is quite encouraging. The only thing was though that then once we got a while into the crisis, all of the care centres and animal homes were closed down for people to adopt new animals. Um, so the question is, has it been possible to still get a pet if you want one during the lockdown? And I went on to Gumtree London, and you can see that yes, you can still get pets if you want one. So this is all very, all very encouraging in the long term. They had a trading update only on as recently as April the 2nd, and they disclosed that they have been getting exceptionally high sales in their stores. So during the lockdown, people have been buying more than they normally would on pet products. They said that their current expectations for pre-tax profit were above the top end of the current market expectations. So if I jump ahead here to the profit and loss, that means that the analyst predictions are going to be met. On the other side, they said that obviously their grooming rooms are closed, and the vets are going to take a bit of a hit from the lockdown situation because they're only opening their vets up for emergency services. So we've got a big boost in their retail sales. Yeah, so let's just then think about what that means about the overall strategy. So overall, I think they should stand up well following the corona situation because there's been a boost to their sales and a boost to people obtaining animals, and that has been tempered by the problem with the vets having lower sales. So overall, though, it should all even out quite well. Okay, so to look at their profit and loss, and there've been really nice increases, steady increases in revenue, and we know that this is going to continue. The problem is that their net income has kind of stagnated a bit, but we do see now confirmed that they should meet their 2020 estimates of 73 million. So we've got a steady, kind of stable net income. And the question is, in the longer term, will they be able to expand their vets profits in order to get back to revenue growth again in the future? There was this fly in the ointment here when I was going through the expenditure, and when I looked into it, what happened was that in 2019 they closed a few of their vets because they just weren't performing, and because of this restructure, this is what took out their net income in 2019. However, as we can, however, we know that they have returned to normal for 2020. So in terms of their assets are, there's nothing fairly unusual there. They've got a reasonable amount of cash. One thing I noticed is that 90% of their assets are actually intangible assets. So I definitely wanted to investigate that. And that was pretty much all goodwill. So that's the amount of sales expected from all of their shops and vets over the next 5 years. In terms of their debt, and when I looked at their short-term debt and their short-term assets, they kind of cancelled out. And that's the kind of usual business churn. So it was good then to see that in their long-term debt, their actual loans are only 18% of what their long-term assets are. So generally, they're fairly solid. And also, there's been a trend recently of them paying down their long-term debt. When I look at their equity is actually dominated by retained earnings. So this is good. So yeah, so there's nothing disconcerting here. So I'm quite pleased with how Pets at Home stand up as a defensive corona stock. I've definitely found that their sales have not been negatively affected during the shutdown period, and particularly with more people buying pets recently, we can expect their revenue growth to be fairly safe. When I look at their historical revenue growth, it looks nice, and the return of their net income to their historical numbers has been confirmed in their last update. Also, in terms of their debt and assets and things, it all looked very solid to me, and their equity was mostly retained earnings. So overall, they're all looking quite nice. But the only thing kind of hesitating from them being like a total Bobby Dazzler is their share price has really been acting kind of strange. It's been dropping despite their performance basically being okay consistently. And, during this time, the FTSE was stable, whilst Pets at Home share price was dropping. And I just don't quite understand why. And then again, why did it then increase in 2019, even though their income was basically just staying the same when you take account for the vets outlier thing? So they're generally a good pick, but I just don't understand what's going on with their stock price, and so that kind of throws me a bit. Um, so okay, so what do I do? So I've got here now a nice little shortlist. I've already actually purchased some shares in Frontier Developments, and I'm probably going to be buying one stock a month or something. And now I've got a vast 888 holdings and Pets at Home. So Pets at Home, it's generally good, but not perfect. But what I want to do is maybe even find another one or two Corona picks, and then go through them again. And I know that definitely the one I get will be a good one. The work I've put in to researching them, and it definitely is in the shortlist with 888 Holdings and Avast. I've identified Pets at Home as a Corona pick. Their sales will not be hurt by lockdown and relatively unaffected by any subsequent economic downturn. Yeah, many of the fundamentals were good, but when I looked at the 5-year share price trend and reliance on vets, it's kind of made me a bit more cautious about them. So they're definitely in my Corona pick shortlist, but I'll only buy once I've assessed them against some other picks. So, like, I'm going to weigh them against the other stocks I have at the time, and like, if their share price was to drop to 200, it'd certainly make it easier for me to go for them, just because I just don't understand what this drop and increase was about. Um, and then also I'll be looking at the S&P generally, and then the FTSE 100 generally, and over the course of the next month, I will be getting my second Corona pick. Um, so what should I buy them? Then I would be keeping an eye on their revenue and profit growth, because it's essential they keep growing their revenue and profits in line with their use of the vets to boost income. If this doesn't, it's only doing this is going to increase their share price. Um, I'll be then looking carefully at the vets segment. I'll be looking at there is a possibility that they could start taking in some serious competition within this retail park space. So if, for example, one of the supermarkets started setting up a whole pet center area or something like this would be a danger to look out for. Also, the wage inflation of professional staff. So they're relying on growing their vets business, but those staff are kind of highly skilled. So there could be wage inflation problems, particularly after Brexit. And then okay, so I put it here. I did pick up a story about cats being able to catch the coronavirus. So that's just sort of in there as something to look at. but I think that's quite a low likelihood risk. So yep. So overall, pets at home are definitely a strong contender, and I just want to do a bit more homework on few more stocks, and maybe they'll be one of the better ones.